Global markets are kicking off the week in a relatively contained, headline driven fashion, with price action dominated by geopolitical developments and their implications for inflation and central bank policy rather than fresh macro data. The key driver is the evolving situation in the Middle East, where U.S. efforts to facilitate shipping through the Strait of Hormuz have helped ease immediate supply fears, weighing modestly on oil and offering some tentative support to equities. That said, the backdrop remains highly fragile, with Iran pushing back strongly and recent security incidents in the region underscoring the risk of further escalation. In FX, the US dollar is holding firm, supported by a combination of safe haven demand and a renewed focus on the inflationary implications of the conflict. The prospect of sustained or even higher energy prices is reinforcing expectations the Federal Reserve will need to keep policy restrictive for longer, underpinning U.S. yields and the broader dollar. Across G10, price action has been relatively range bound in thin liquidity conditions, but the underlying themes are clear. Dollar yen remains elevated as yield differentials dominate despite persistent intervention risk. Euro dollar is softer amid trade tensions and a less supportive growth backdrop, and Aussie dollar is holding steady ahead of the Reserve Bank of Australia decision tomorrow, where a hike is widely anticipated. From a risk sentiment perspective, equities are attempting to stabilize, supported by the idea that worst case disruption to global energy flows may be avoided, but conviction remains limited. Oil continues to act as the key macro transmission channel, with elevated prices feeding into global inflation expectations and complicating the policy outlook across major economies. Overall, markets are in a consolidation phase, with investors reluctant to take strong directional views ahead of greater clarity on both geopolitical developments and a busy week of central bank and data risk. The broader takeaway is that macro fundamentals, particularly the inflation impulse from energy and the associated central bank reaction function, remain in control, but are currently being driven almost entirely by geopolitical headlines. That's all for now.